Hi there. Costco versus Amazon. Which one is a better business and which one is a better investment in the next 5 years? You don't simply look at the stock price year to date. Yes, Costco up 9%, Amazon down 13%, and then you say, yes, Costco is a better investment. No, you don't do that. Don't do that. You have to look at their business. What they do, how much money they make, and what's their profits. This is what to do, to value those two companies, Costco and Amazon. Now, their sizes, you may notice that Amazon has a market cap around $2 trillion and Costco a market cap $443 billion. So, to compare those two companies, you look at the revenue, right? First, Costco. Total revenue for the last year, 2024, $254 billion. Amazon, total revenue for the last 12 months, $650 billion. So there is a big difference between them. But, pay close attention to this. Costco and Amazon are two different businesses. Because when you compare Costco with Amazon, you have to exclude AWS, the cloud division. Otherwise, your comparison won't be good. So, we compare total revenue of Costco, $254 billion, with Amazon revenue for North America and also international. So let's start with North America, right? For the last 12 months, Amazon made close to $400 billion in dollars. $394 billion. Costco, $254 billion. Now, the difference between those two numbers isn't that high, right? $400 billion, $254 billion. So, close to $150 billion. That's the difference. Now, to do a good comparison, you also have to look at their earnings, to look at their margins. What's their margins? For instance, for Costco, operating margins for 2024 were around 3.6%, 2023 3.3%, 2022 3.4%. So as you can see, they are able to generate profit margins higher than 3%, close to 4% sometimes. And Amazon, if you look at their operating margins, are quite higher for the last 12 months, 6.3%. So when you compare North America from Amazon with Costco, same thing, North America, you can see that Amazon has a better business than Costco. But why the stock price of Costco year to date is up 9% and Amazon down 13%? Well, pay close attention to this. Then, let's look at the international segment. Amazon, you see here for the last 12 months, $144 billion. Operating income, close to $4 billion, $3.9 billion. So operating margins, 2.6%, right? From their revenue, they're able to earn 2.6% in earnings. Then Costco, if you read the report, you can see they also report not only the North America revenue, but also their international markets, where they made $45 billion in 2024 internationally and earn around $1.4 billion in earnings, operating income. And their margins here are higher than Amazon. They're about 3.9 for 2023 and 3.93 for 2022. They are quite higher than Amazon. And now, when you want to value those two companies, not only you look at the revenue, how much money they make, and what's their final earnings, but you also have to look at their future potential, their future growth, how much they can grow in the future. And this is a question you should think about. For Amazon and Costco, think how much they can grow in the future. Now, when you look at Costco, it's quite easy to track their indicators. You look at comparable sales for the US, Canada, and international. And you look here, adjusted comparable sales. US 8%, Canada 10%, other international 10%. So total 9.1%. And then another important indicator is the traffic. The more people you have in your stores, your warehouses, the more money you can make. So this is another important metric to track. And then, as you probably know, Costco makes money from selling merchandises. They buy at a low price and sell at a higher price. And the higher their volume, the higher their revenue. But, be aware they also have another segment, membership fees. And this makes the highest profits. Pure profits. Because their costs is quite low, tiny, compared to net sales, where you have the merchandise costs. So, the more money they make in membership fees, the more they make in operating income and their final earnings. Because, as I said, those are pure profits. Their costs are quite low. So, once you understand this, follow the right indicators. You also look at their membership fees, because this is the most important driver for their earnings, Costco earnings. And you see, membership income growth 7% year over year. Renewal rate 90%. US Canada a little bit higher, 93%. So they have sticky users to their membership. And here you can see total card holders and paid memberships, 78 million, an increase of 6.8% year over year. And this is quite a lot. If you see an increase here of 6.8%, so in their earnings. So their earnings may grow by 6-7%. And on top of this, growing in their membership fees, especially their members, you also have, of course, digital. Because as they compete with Amazon, they have to go digital. They have no choice, because otherwise they lose their business. They have to compete. And then the most important thing about Costco is that they keep expanding their stores, warehouses. You see here, warehouse expansion. For 2025, they expect to add another 18 warehouses. 12 in the US, 2 in Canada, and 4 international. And I'm quite surprised that they keep adding 12 warehouses in the US. This means there is still demand there. They can grow even more. And also international, as you can see, by the end of 2025, they expect 175 stores. And this is a huge market, especially if they can tap into other countries. Asia, Europe, and maybe Latin America, to build more warehouses there. Imagine if you have an increase from 175 to 600, as it is in the US, you have more than 3x. And if you look at here, operating margins, they are close to 4%. So higher than in the US. And if they can do this expansion international, as they did in the US, maintain a profit margins between 3 and 4%, guess what will happen with their business in the next 5 to 10 years? It will double. It will double for sure. From 9.2 billion in operating income, they can make 20 billion. They can make 20 billion. As long as they keep doing the right thing. Keep their costs low, increase their revenue, expand their membership fees, and keep building more warehouses around the world. Now, Amazon, if you look at Amazon, they can also do the same thing, and for sure, because the market size for e-commerce in general for those retailers is quite large, and they both can grow together. If you look in the US, the two main players are Amazon and Costco for commerce. They are the main two players. But Amazon also has an advantage, AWS. Their profits can grow even higher in the long term, because they have retail, North America International, plus on top of that AWS. And this is no longer a retail business, e-commerce, but software. And when you have software, you have higher margins. So, the problem with those two businesses right now, as I said, you compare the business models, but also you compare the return on your investment. Which one will deliver a higher return in the next years, 5 years? Costco or Amazon? And the answer is not that easy. Because right now Costco is way overvalued. If you only do a simple valuation based on their earnings and future growth, that the earnings will double in the next 10 years, you will see that the market cap is quite overvalued. From this level, the stock price can go down to $500. Because as you can see, price to earnings is over 58. And if you pay this high price, you get burned if something bad happens. Bad economy, a decline in their sales, or a decline in their margins. So right now, Costco is overvalued, and I don't think that they can deliver a better return than Amazon in the next 5 to 10 years. And about their business model, what can I say? They have quite a good business model, but still Amazon has a better one because they also have AWS. Now, about Amazon, from this level, as I said in my past videos, if you watch my Amazon analysis, you know that the stock price again here is overvalued. The fair value may be around 1.2 trillion to get a nice return, but again, depends on your return. If you are pleased with 5% a year, then buy right now. But if you want more, then you have to pay a lower price, like as it happened in 2023, $102. So about the return here, yes, Amazon may have in the next 5 years a higher return than Costco. And if you ask me to compare those two companies, yes, my prediction that Amazon will deliver a higher return in the next 5 years than Costco. But this doesn't mean your return will be great, because maybe the stock price will decline 25%, Amazon, and Costco will decline by 40%. So my prediction is right, but you still lose money, and you don't want that. That's why, if you are planning to invest in those two businesses, be very careful. Don't buy at the highest peak because you get burned, but buy when the stock price is undervalued. And if you want to have high return on investment, to buy low and sell high, then you can join my membership, where I have an ongoing investing course that will teach you how to take advantage of undervalued companies. Plus, you also get access to my portfolio and see every transaction, what I buy and what I sell. So you go to my profile, press join, and then scroll down to choose the level you want, join. And on top of this, I have an exclusive level, and 1 hour coaching call with me. If you are a beginner and you don't know how to start, take advantage of those companies to buy low and sell high, then you can join my membership exclusive. And you have 1 hour coaching call with me. And I'll teach you step by step. Stay with you, you ask me questions, I'll explain, share my screen, and we do the work together. Or if you are an advanced investor, you have a company and you want a different view on that company or a deeper analysis, you can also ask me. You have a discussion with me. An 1 hour meeting. I share my screen, you share your screen, and we collaborate together. So if you want to increase your return on your investment, go to my profile, press join, and see you there. So that's it for this video, and if you have other questions, please let me know in the comments.